A $15 million loss. That's right, a $15 million loss. That is what we are talking about on today's episode of the Never Lose a Deal podcast. Welcome. This is Lorelia. I am your host of the Never Lose a Deal podcast. This is a show if you are someone who is looking to build out their portfolio, leveraging creative financing, then you need to tune into today's episode. Now, today's episode is a little non-traditional from what I usually do, but I thought this was a great topic because I actually got some great takeaways from what actually occurred with this particular story. Well, Brandon Turner, the creator and the owner of BiggerPockets, if you're watching me on video, I may be looking down because I want to make sure that I am stating the correct things. But Brandon Turner of BiggerPockets recently announced, and that's the only reason why I'm doing this video, is because he did put it out on social media about a particular investment that he was the real estate syndicator of, and that his investors had to incur a $15 million loss. And I am not going to give a critique or do a deep dive on this. I do not know Brandon Turner. And so this is not to discuss what had happened, and is it a bad or good thing. I'm looking at this from the standpoint of some great takeaways that it doesn't matter at what stage you are in real estate. There are two things that I took away from what he shared. And he talked about, and I'm not going to go into detail, but if you, like I said, you can find him on Instagram. I think I also saw it on LinkedIn where he talked about, not going to go into the details, but it's a real estate investment that he was involved in, that he was the managing partner on, and that due to the recent changes in the market, this was a very large commercial deal. He had different classes of investors. He had Class A and Class B investors involved, and that there was a $15 million loss, and the Class B investors got wiped out. Like I said, not going to go into the details of, oh, they didn't get their money, this, that, and the other. My biggest takeaway, and this is what I've shared with a few investors that I've talked to, is that the one thing that he pointed out, if you can't take anything away from what he talked about in this expose that he did. And I know people are saying, well, I'm not a real estate syndicator. I'm not invested in one. I don't have no interest in one. I don't have an interest in, getting investors' money and investing in big projects. That's not the point. Like I said, there's two takeaways. And the first takeaway for me is it has to do with cash flow. He talked about in that post that he did, that expose, about how cash flow is very important to a real estate deal, and that due to the interest rate changes, that they were in the red. Now, once again, what he's talking about is something that if you are in the commercial lending space or the investor financing space, even though I don't help investors get loans of that magnitude, but the fact that I am in the investor financing space, I do sit in rooms where these conversations are talked about. And that was one thing. I actually was hearing these conversations, and so I appreciate Brandon for sharing and being very transparent about that. That with him sharing his story, he hopes that other people will share the story as well, because other syndicators are going to face this, and what that is that many interest rates have reset it, and he talked about that in the post, that due to the fact of the rate resetting, because with commercial loans, a lot of times they're not a 30-year fix, And so it was a 4-year interest rate that reset it. And so it totally changed the value and all the numbers in the portfolio that he was talking about, that he had the $15 million loss. I say that to say, in the circles that I'm in with the lenders that I work with, they said that syndicators in the next couple of years are going to have to do something because interest rates are going to change on a lot of these loans. Now, the great thing about Brandon Turner, he was able to sell because a lot of these lenders also are talking about the bad debt that is going to be put on the books, because Brandon was actually one of the smart ones that he was able to sell the portfolio to another group of investors. Now, unfortunately, like I said, he had different class of investors, and a portion of those investors got wiped out. So that's the downside. Another takeaway. Now that's all I have to say about that. Like I mentioned, cash flow. He talked about that. What I will also add to cash flow, and this has to do with going back to what I said. I know you're not a real estate syndicator, you have no interest in one, you don't take investors' money. But let me tell you this, now more than ever, I don't care what area of real estate you are in, this is not the time. Once again, what you can take away from this Brandon Turner story, this is not the time to let people sprinkle fairy dust on you and have you to believe that everything is going to be smooth sailing. What do you mean by that, Loretta? Individuals who try to sell you on appreciation. The numbers don't work, the numbers don't make sense, but you believe that the values are going to go up. This isn't a market. Now, once again, if it if you do plan to do that, know how much runway you have, because that's even what Brandon Turner said. He said that if he had a fixed 30-year loan, that it could he they could have recovered because they could have rolled it out. But because the interest rate was about to reset, it just wasn't going to work. You need to know how much runway you have. And now more than ever, and especially with the work that I do with creative financing and helping investors structure deals to build out their portfolio, everything is based on the numbers. This is not a house hacking deal. And this is the part that no one likes to do, because most people want to sprinkle fairy dust and tell you that everything is going to be great. No one wants to run numbers. How is it going? Are you still trying to figure out how to build out your real estate portfolio? I know all the gurus online just told you, just put in a Google search, find an asset based lender, and voila, you are going to find the lender of your dreams who's going to give you 100% financing, and you are off to the races being a real estate millionaire. But you know that isn't true. So, this is what I want to share with you. There is a way that you can build out your real estate portfolio with no confusion, because you want more than just a Google search. You want more than just talking to somebody on the other side of the computer who's pretty much just giving you a rate sheet and maybe some terms. I get it. And you are frustrated. But let me share with you, there is an easier way. There's a way that you can build out your real estate portfolio and have that personalized touch that you have been searching for. You want more than just random Google searches and overused AI prompts that have been used all over the internet. You want to build your real estate portfolio with expert guidance, and you want to be able to be given lender recommendations that have been vetted and suited just for your situation. If that sounds like you, I want you to join me at my next workshop. In this workshop, I'm going to share with you my 3-step framework. In this framework, I'm going to share with you how I've been able to help clients real estate investors, experienced ones, build their real estate portfolio with ease and eliminate all the confusion that they have been hearing online. So if that sounds like you, I want you to join me at my next workshop. You should see it here on this video, and I look forward to sharing that information with you. See you at the workshop. When you go from being a house hacker, when the only thing you had to look for is um, can you get approved for a loan? As long as you can get approved for a loan, and you knew you were going to get your housing for free, you had tenants who were going to pay for the other units, that works for you. Doesn't work like that when you become an investor getting investor financing. The numbers have to work. The deal has to cash flow. So be very careful of people who tell you cash flow means nothing. Don't worry about cash flow. Goes back to how much runway do you have? So that was one of the biggest takeaways that I got from what Brandon Turner said. And keep in mind his transparency of saying there's probably other real estate operators out there, syndicators, that this is happening to, but they're not saying nothing. And he was very transparent with saying something. So I think definitely that is going to cause his brand equity to go up, because he was very transparent with what he shared. Then he also talked about the constant webinars and meetings that he had with investors to let him know what he was doing. The second thing that I took away from what he shared had to do with the financing. The financing, know your numbers. See, that's the part that most people want to gloss over, especially now in this time space reality on the internet, when you have people who tell you, hey, you want to be an investor, just get an asset-based loan, find an asset-based lender online, 100% financing, yada yada yada. Many people who are going to take that advice, mark my word, they're going to lose their shirt. They're going to lose their shirt. And I know I don't mean to be a Debbie Downer, but they're going to lose their shirt because unfortunately, investor financing doesn't just work like that. Are there asset based lenders or investor lenders, investing financing lenders that are online? Yes, there's even commercial lenders online. You can find anything online. That's why I tell people, if you tune into my show, the Never Lose a Deal podcast, I give you enough meat for you to take what I say and run with it. Whether you want to chat GPT it, you want to Claude it, you want to Google it, I give you enough meat, because the worst thing that I want to do, I never want to crack a person open and then leave them with, I'm not going to close. I cracked you open, I opened a loop, and I'm not going to close a loop. I have no problem with closing the loop. And there's going to be a lot of people in business say, oh, I never will close the loop. They got to be part of my mastermind, and that's when I close the loop. Hey, let me tell you, it's too much information on the internet, and online, and information is cheap. This is what I tell people: information is cheap. Like I said, I give you enough that you can take what I say and run with it. It only gets expensive if you want it to come from me. Now, if you want it to come from me, you want my guidance, you want me to share with you how this works, because once again, a lot of people can give you information. Most people will not give you the steps. And so how to get there. And that's when I tell people that's when it gets expensive. Because that's why I share so much on this podcast, because I understand information is cheap now. And if you listen to my podcast, I give you enough information that you literally can take what I have and run with it. Whether, like I said, ChatGPT it, Claude it, whatever's your choice, AI tool, or go to Google, or go to your local and real estate meeting and run with it. Um, I say that to say, it only gets expensive if it comes from me and you want my assistance. So once again, what are the two things that I got away from, that I took away from the Brandon Turner situation in the $15 million loss? One is has to do with cash flow, and number two, financing. And as we continue in these uncertain markets in real estate, these are things that you have to look out for, because I tell people all the time, when you understand how creative financing works, and let me share this with you, Lee. Creative financing has nothing to do with just getting an asset-based loan. If you think that's what it is, that's not it. That's someone is selling you something else. And I tell people that's not my framework. Could it be part of it? Yes, but it's not my part of framework, because I have told you in other podcast episodes, I started real estate in the most difficult time, which was doing a housing crash. Nothing was moving. No money was moving. Banks were closing. People were getting foreclosed. Bankruptcies was high, but I was still able to do deals. Why? Because I understood creative financing, because creative financing allows you to structure deals that are the non-traditional way. So when I hear people think that, and like I said, I don't know what other people teach, but when it comes to my framework, can it include asset-based lending? It could, but then it's also no asset-based lending or no lending, because that's the beauty of creative financing. You get to put the deal together that works for you as well as other people that are involved, and is a win-win for everybody. And I've told you that story back in 2008. That's how I got started. And to this day, knowing how to structure deals will always be a good skill set to have when it comes to real estate, because now you're not at the mercy of doing things the traditional way. And as changes like we're seeing in the real estate market, even though I did an episode, I said New Jersey is holding steady. um, it is what it is. This is just where we're at. So you probably want to lean more into creative financing. And so I say this to wrap this show up with telling you, as always, go to www.neverloseadeal.com. There you will learn more about the webinar that I do talking about creative financing, how to buy and build your real estate portfolio. This is for builders. This is not for newbies. This is for builders. Individuals who are past the house hacking stage, they're now in the building stage. You want to know how you can do it with no W-2s, no credit, and no tax returns. And like I said, this is for builders. This is not for new real estate investors. So if you want to learn more, go to www.neverloseadeal.com to learn more. See you in the next episode.